Partnered by Times Influence.
Facebook and the Boston Consulting Group recently partnered to release an industry report on the theme Encashing on Digital Financial Services in 2020, which decodes the power of digital in fueling the next wave of growth. Top industry leaders and experts shared their thoughts on the theme.
Let's start with you, Mr. Kapoor. What do you think are going to be the drivers? Does this look like such a big pool of market, 250 million users by 2020?
I personally believe that the 3 Ds relevant to the disruption in payments, disruption in financial services are very intact. I think the demographics are so conducive. Definitely the deregulation and the space, particularly in the digitization space. And the third factor, the third D, which I believe in, that the overall digitization and digitalization process in the whole country has picked up fantastic momentum. And if you add to that the India stack, the public stack, the public stack is very well configured because most of all it's frugal, it's affordable. So I think that's the second factor, because we have to analyze what are the conducive forces. And thirdly, I believe there is a convergence in all of this, and there is a market, and the tailwinds are so strong for us to move rapidly forward.
Right. Tailwinds are strong for us to move rapidly forward. Among 3 key drivers for what's going to be a sort of transformational growth that we're going to explosion, so to say, over the next 3-4 years, what do you think are going to be the 3 key drivers of this?
So I think when you look at it, one is connectivity, right? I mean, it's great to say that India has 400 million internet connections, but on the flip side, 70% of India is still not, crossed the chasm on the digital divide. So you still have 800 million Indians or 900 million Indians that do not have access to the internet. The second part of it is going to be education. How do you get people to adopt? One part is getting UPI and the stack out there. The other part is to get mass adoption going, right? And I think the third part is to use the mediums effectively. I find that a lot of times there's schizophrenia around using a particular medium to reach out to audiences when audiences aren't available there. So if digital is going to be the most ubiquitous medium, then we gotta put our muscle behind that entire piece.
Alok, how do financial institutions build stickiness among users? Because that's going to be critical, right, for us to sort of get to this sort of growth. Ability to build stickiness among users. Do they have it inherently? Is that capability that they need to acquire?
No, so I think financial institutions so far have done a fairly good job of building stickiness. I don't think there is a problem with that. I think the problem is customers don't like to interact with their financial institutions. Right?
That's not a good situation.
And I think there's a reason for it, right? Because my financial needs don't exist in isolation. My financial need exists in context of my business need, or as a consumer, what am I looking to consume? So I think we are underestimating the digital opportunity when we look at it as a medium for reaching out to customers. I think that is the delivery mechanism. Yes. Banks will get unbundled into services that belong where they need to, right? Working capital finance is going to sit on a business transaction, not inside a bank, right? Facebook is not going to be the best way of reaching out to customers. It's going to be the best way to deliver banking to customers. So I think that is the gross underestimation in my mind, and that's the lever which, in my mind, takes these numbers, to a very different scale. And to me, the only potential disruptor, right, in the whole equation is reimagining experiences that customers will have, and where will they want to have that.
Bhargav, you agree with the point that Alok was making about reimagining customer experiences, and inherently are banks doing enough of that? And that's something I want to touch upon in greater detail as well.
I think Alok is bang on. I mean, what the current medium is providing as an opportunity is to think about what the core needs of customers are. I mean, talking about digital for customer. I mean, the digital is beyond just customer. There's a lot of things that you can do if you think about, what you can do with digital. But just staying with that point, if you look at, our products, like let's say auto insurance, our bank, auto loan. I mean, a customer doesn't wake up in the morning thinking that I want to buy an auto loan, right? Or I need to get an auto insurance. They think of, which is the best car to buy. Why do I think this is the car that is good for me? What is the cost of this car? How do I finance it? If something happens to the car, what do I need? Those are the secondary questions.
Sure.
And I think there is an opportunity, and you're seeing this in China, nowhere else really, as far as I know in the world, of companies which is looking at this as at a platform level, right? So if you look at as a financial institution group in a partnership with, let's say, a car portal, if you can partner together and say that when the customer comes on the portal, let's understand what he or she is wanting to do. Can we seamlessly align our offering with what the customer is demanding? I think there is a much bigger, potential to create love for your product. I think the point that Umang was making, and I think so to that extent, Alok is absolutely bang on. The other thing that I would want to add upon to what we've talked about is certain segments of business which in the past was possibly out of access. I mean, there is a set of customers who we can reach out in a much better way as we are, talking about, but there's a segment of customer that we couldn't touch. I think this is providing, digital is providing an opportunity to touch those customers. I mean, we talk about 300 million smartphones. I mean, that's more than the number of insurance customers in the whole ecosystem, right? For all the companies together. I mean, you look at the number of two-wheelers that is being sold. We believe less than 10% of the two-wheelers after 2 years have an insurance. Why? Because no one is providing that product to them. Digital provides you an opportunity of reaching out to those customers in a cost-effective manner and expanding the market. So there are a lot of other plays that come out beyond what we've just talked about.
Arijit, is that obviously it's a startling number as we sort of looked at it, you were like, where is this money coming from? But what do you make of it? $3.5 billion, do you see possibility for that sort of savings over the next 4 years?
Absolutely. The number may just be a number, but what it possibly indicates or is trying to indicate is that there is a huge, huge opportunity. Now, one very interesting thing which came up in the earlier presentations by Umang and Amit is that at what stage are we in adopting and delivering? And in that, I think the only thing that will make a difference is customer. So that number of 3.5 billion will depend on how effectively the companies, whether it's an insurance company or a bank or any other company, is able to service the actual need of the customer in the way that he or she wants it and do it in the right manner. So absolutely, the way we can...
let me get a word from Rajkiran as well. $3.5 billion opportunity. Is there a conscious recognition of that opportunity? It's great for us to sit in a panel and discuss and talk about it, but is there recognition in the industry that is how big the opportunity could be over the next 4 years?
Yeah, if you talk of awareness, it is there across the industry today, particularly in the banking, like we talk and we get presentations every day on this. There is a lot of disruption happening, and we are aware of this, and we also recognize the potential available in this. If you have seen the banking space, a lot of tie-ups are happening with the fintech companies across, the new financing models are emerging. Even the regulator is talking of the new financing models, which are unheard of. But if you really see this money what you are talking of is looking after creating a new customer base. But if you look at the existing customer base and the information which sits on my server, even that we are not tapped. Because we also have an insurance company. I have not tapped even 0.5% of my customers. So just imagine the kind of what data analytics can do and the information mining can happen. And if you can cross-sell to this section, it is huge. Even this money what you are talking of is very small, according to me, and it is much bigger than that.
Would you say that to some extent financial institutions, legacy financial institutions have to some extent been caught napping by the fintech wave that's come and sort of taken everybody by surprise?
Overall, my view is that the Indian banking industry, and I deal more with the banks than insurance companies, hence confining my remarks to that, has actually been very nimble and agile to this opportunity. I think part of what has allowed them to do so is because this wave was already visible globally before it came to India. I think part of the enabler to that is that while we might call banking a legacy industry, and sure there are banks and then there are banks, many of these banks are fairly young, right? So, I think the new DNA has been kept alive in the banking system.
There's phenomenal intent. I think you cannot dispute the fact that across the panel, and we've got cross-section of the industry, what explains the fact that only 12% of online banking users. I mean, the fact that only 75 to 80 million of people are online banking users when you have about 640 million banking users. What explains such poor adoption as of today?
So one is lack of awareness. Second is trust. Third is, in terms of adoption, is just the people being aware that that it can be done. And I think the fourth point, more and more that I see it even with myself, is I think I am educated enough to use the app. I think what's happened is banks over time or institutions over time have taken the full branch experience, ported it onto online banking, and then ported that onto mobile banking, right? And that makes the experience really hard. Those are some of the drivers in my mind that are keeping away the adoption from being really large.
Rana Kapoor, what can banks then do or financial institutions then do to win the trust of the digital consumer? Because even that, even the analysis they pointed out that trust was one of the key factors that explains low adoption. What can financial institutions do on that front?
I think first and foremost, there has to be on the back of Digital India, Skill India, and all the other government programs which are running, there has to be total comfort and literacy. Because all of this is fundamentally revolving around literacy and the comfort. The banks have the highest confidence and conviction because of literacy. The other plumbing channels and other will take a while, and the digital wallets and all, they'll take their own time. So I think the trust will come because banks have to become a little bit more adventurous in terms of making bold steps and moving in this direction. How do you do that? The point is we've got legacies. Unless the CEO is evangelizing, and I'll give two recommendations, which I do in the bank, and we are a very young bank. I said you have to build what I call a DICE philosophy. So you have to think like design, you have to think like innovation, you have to think like creativity, and you have to build entrepreneurship as a culture in financial institutions who are moving increasingly as technology platforms providing services. Right? Number one. Number two, and this was stated earlier in terms of competition and collaboration, I call it co-opetition, right? So to get co-opetition, what do you need to do is art. We call it yes art. I'll share the secret with you, is alliances. I don't want to do stuff that Facebook can do fantastically well, or Microsoft, whatever, or relationships which they have and we have to complement them. They can do certain things, I can do certain things better because of regulatory enablement. And then the technology becomes the common factor, the common enabler. So DICE art. And I come to the third point, which I think is the fulcrum to all of this. That in any transformation which is happening, we must be decisive.
The issue on the ground is much more mundane. I don't think it's a trust issue. I think insurance, or rather financial institutions are largely trusted by customers. I think there is a user experience issue and the design issue and reaching out to the customer at the right point issue, no doubt about that, and we can do a lot better, significantly improve job on that. If I look at insurance, specifically general insurance, I think we are competing with low-cost human beings. Let me explain. So, when we look at our, path to purchase, we looked at more than 400 of those. Roughly about more than 10%, about 50 of those have an online point. But that doesn't mean that we have 10% sales coming online. It's less than 2%. We've been selling online for the last 12 years. Now, what are we competing against? You go to buy, to a dealer, buy the car, the insurance is plugged and pitched and sold at that point in time. Can't get more convenient than that for a customer. Second year, the dealer will tell you, come to me for service. I'll renew the policy. Obviously, you'll go there. Anyway, you'll go there for service. It'll get done. Third year, an agent will say, sir, you've looked at this pricing. You've seen this price on this side. I'll come and give you a lower price. I'll come home and pick up the check. That's what we are at least competing against. I think that's transient. I'm sure it'll change. It's a matter of time when, that cost will become too prohibitively expensive. And that's where I'm saying, things which are low cost, it will automatically move online because there's no way to serve it physically. So there are mundane issues as well. The cost to reach out to customers digitally, right? I mean, the amount of money that you spend on while I think the point is valid that, maybe customers spending much more time online, but we don't spend as much online. I think we believe we spend a lot relative to the others, but I would love to spend much more, but I'm still not seeing the ROI. I don't know what we are doing wrong. Is it more expensive to advertise, or is it that we are not doing a good job in conversion? Could be at either places, but that's another challenge, and that's something maybe we should sit together and resolve. So there are other mundane issues. All of these points that are being made are valid, but there are a lot of other mundane issues that we need to solve.
I'm sure Umang will want to comment on that, but I want to get a quick word from Arijit as well on the way you're seeing this transformation happen. How do you sort of expect?
Yeah, absolutely. So I was just going to add to what Bhargav said. You know, this, if you purely look at online and the amount of cost that as a life insurer I need to spend is humongous at the moment. Actually, it should be the most profitable because there's no commission paid, but actually it's the most expensive because of the way it is structured. Why all insurance companies are still geared towards that is because of what I mentioned, that digital at the moment cannot only be looked as only the online channel, but the entire possibility that you are driving in terms of better customer service, in terms of assisted sales, in terms of all the other things. The second point that I wanted to make was taking on, you know, I think the key is, again, the customer and user friendliness. Just one example came to my mind. We were seeing an app which we were ourselves setting up, which, very friendly going on, and then suddenly it had a column which said that what is the sum assured you want. Now, it's these small things, and all that needed to be done is that you need to write how many years would you like the term to go, and there should be a drop down. So once we get that right, and the entire company, whether it's a bank or an insurance company, and it cannot only be the IT guys. In fact, the IT people will make possible every possible complication. But it has to be the person who's driving business, who understands how the customer thinks, and then gets that together.
Umang, you want to comment on that, the point on rate of return, and also the point of sort of looking at social media, sort of platform like Facebook, beyond the lens of just, it's not about discovery anymore, right? I mean, it's sort of way more than that. How could sort of social media collaborate with this in this process?
So I couldn't agree with Bhargav more, right? I think gone are the days when we lived in a social jail where you counted just your likes. CEOs like the ones on the panel today are asking, what's the return on investment, right? How can I grow my business? And for them, growing their business really is building more brand awareness and reaching more markets, or driving more sales and acquisition, right? And ultimately profitability. So I think I'm in violent agreement with that, right? With that whole concept. There are some key learnings that I've seen work. The first is great reach or great advertising or great marketing at the heart starts with great creative. And the way the game changes, that you're no longer talking to 10 segments of customers. You may be talking to 100,000 segments of customers. So the ability to create personalized creatives at scale is an opportunity and a challenge that we as an industry have not solved yet, right? And we're working on solutions at Facebook in terms of how we do that. And we're working with some key partners and clients in order to do that. That's the first step. The second step is really moving away to a real identity people-based system. In a very simple fashion, if I were to put this across, no one wants to talk about cookies and all of that anymore. It's really about real people. It's not about the number of clicks or likes or tweets or whatever I got. It's about the number of conversions that I got. So I think the whole narrative has to move to a people-based narrative where you're measuring real-world business outcomes. So I think it's a combination of three things: the right creative strategy, having the right targeting with the right creative going to the right audience, and the ability to drive and measure real-world ROI in terms of brand lift or sales lift, right? Which is away from jargon and clicks to a people-based measurement outcome.
The key risk is the issue of privacy. We've spoken about the opportunity and everything, but we are in a climate where people are, as data explodes, people are going to be concerned about their privacy. We spoke about the trust factor as well. Is that going to be a big factor?
It is a very big factor, because I spoke of confidence in the system. Because moment there is a leakage of information which happened twice or thrice in the recent past, it shakes the confidence of people. But I would like to add one thing here. It is actually, you can develop as many technologies and apps. Ultimately, the customer who is going to decide which app will succeed. Now, we had internet banking for ages. Mobile banking came much later. But mobile banking app is much better and user-friendly. But even today, 10 times of the mobile usage happens in the net banking. My net usage, my customers using net banking is 10 times more than what mobile users use. So these kind of customer behavior analysis sometimes confuses us also, what actually customer needs, where he is comfortable. So I think maybe the customer behavior analysis should go parallelly. Security is a risk, but then it is like driving. you know there are accidents happening. So customer also have to mature to that level. There's some kind of data leakage will happen here and there. They have to live with that. And kind of the protection system has to evolve, because you can't have a system where there will not be any data leakage. It is bound to happen. But then how quickly you can correct it and go forward is the way the things will evolve.
Right. Alok, is that your word of caution as well? Because, even now the talk of Aadhaar being used as a surveillance platform, much of this growth is sort of also Aadhaar-led, right? So is that a key concern?
I don't think so. I think, privacy has a cultural context. I don't think the Indian cultural context puts primacy on privacy as a value. So yes, all these things are important. I'm not saying let's take customers' data and throw it out, right? But I think customer experiences, convenience, right? Those are much bigger issues than privacy. And I know privacy will get taken care of, right? There is a regulator sitting there. There are very well-disciplined banks. There is infrastructure, right? But that's not one of my top concerns. Or does privacy blow the hole in this? I think all of us are very permissive. I think 2 months back there was a big Aadhaar leak. I think people have forgotten. Right. So
it's not a deal breaker by any.
In my mind, we will do the right things. Right. It's important to do that, but in my mind, that's not the ticking time bomb.
All right. Let's take questions from the audience then. And the first question coming in from, I think, one of you here, which says that as payments increasingly go behind the scenes with Uber, Amazon, etc., what do you suggest for banks to maintain direct relationships that make and maintain consumer top of mind share?
These are two very good, examples of Uber and both Amazon, where, we are key payment and tech partners. In both cases, it's not just about financing the taxis and financing the vendors, which naturally we have to do, but we have to build a system around our API, because this is not about only, the payments, but you have to build an ERP, right, into the customer's payment system, into their working capital, digital working capital system, and then on top of that, add an API. So, the applied programming interfaces become very crucial. So when a bank provides that, what happens is that the payment settlement system is working still through the banks because we are regulated entities. So this is what I meant by saying alliances, relationships driven by technology. Both of them extremely relevant. Both of them are my clients.
Someone, again, one of you said that heard a lot of good stuff about the urban banking users, but what is Facebook and BCG seeing for those who are on the fringe, not yet included in the financial system? What is going to change by 2020?
The research did not cover rural, right? So I won't talk on behalf of the research. I'll talk on behalf of what
Your
I think,
feeling, yeah.
my own feeling, right? So I think if connectivity keeps growing at the rate at which it's growing, whether it's 2020 or 2023 or 2025, the year is not far when every Indian will get connected to the internet. Telcos and OEMs are launching or on the verge of launching low-cost phones, which are smart feature phones, which have the ability to transmit voice over 4G LTE, right? Because voice is nothing but a packet of data in that case. If you look at that feature phone, the cost for that phone, in my mind, cannot be more than 1,000, 1,200 rupees. The cost of acquisition in the telecom industry is as much, 1,000 to 1,500 rupees for a customer. So even if I were to give that phone away free to the existing feature phone users, my hypothesis is that 100% of those 700 million will become internet users overnight. Now, of course, when I say overnight, it could take 3 to 4 years. So that's the first thing that I think will happen, that connectivity will become a basic human right in this country in the next 3 to 4 years. That's what I feel. The second thing that will happen on the back of that, and this is what we've seen at Facebook, our mission as a company is to help drive connectivity, right? Help make the world more open or connected. 1 out of every 4 people that you connect in the unconnected world is lifted out of poverty because you give them access. You give them access to healthcare, financial information, jobs, education. And I think that's going to rise as well. Most importantly, the kinds of products and solutions that are going to have to come out to serve India 3 are very different from the ones that are serving India 1 today. I think even India 2 is kind of evolving and moving in, leaning on to those solutions into India 1. But India 3 needs a completely different ecosystem of players or maybe the same players thinking differently to build differently to cater to that.
Thank you so much for this wonderful panel. I'd like to request all of you to give a huge round of applause to this wonderful panel here.
Partnered by Times Influence.